Hello and welcome back. Thanks for tuning in. This week I have an exciting show of news and real estate data from across the country, most places excluding the East Coast. As always, for some reason they don't like to provide their data before the middle of the month. You guys out on the East Coast should talk to your real estate boards. Tell them, hey, get your data out on time because it's always like last minute and I can never include it in my data set. But anyway, let's get right into this week's news and followed by the stats right after that. First up, we have our spring FOMO video from your local realtor. I'm guessing it's in Toronto. Maybe they are right in Toronto or Saskatchewan, but we'll get into that in a bit. But from Red Pill Rick here, realtors are starting to post this type of shit again. Point of view, you waited for the spring market. Now I'm going to have to pause this a couple times because it's going to get copyright strike here from this music. So this is supposed to be a buyer running down the street, trying to catch up to the spring market, and you'll see the rest here. But again, I got to pause it a couple times. Multiple offers, sight unseen offers. So here we go, the FOMO here. You better have bought, guys. You missed the spring market again. All cash offers from West Coasters. Yeah, so what they're saying is you guys should have bought. Now the spring market's here. Now, I somewhat agree with the spring market is here. We're going to see March. I'm already seeing signs and prices are increasing. They didn't do that in February, which is like the first time in like history. So the overall market is still very oppressed and not looking good. But you're seeing the spring market pick up now, which again, you're going to see it every spring. But what the realtor doesn't say, or whoever posted this, I don't even know who it was, but what they don't say is that this is not the last opportunity to buy. This is a couple months that prices might get inflated temporarily, probably not as high as last spring, mind you. And then the summer comes. So if you're urgently looking to buy, you can wait until the summer to buy. So this is very misleading. It's FOMO. It's classic FOMO is what it is. Now, this news was pretty interesting. It's from Daniel Foch. He gave a shout out to many been rinsed there. So Canada's chief banking regulator is evaluating whether to replace the current mortgage stress test with stricter oversights on banks rather than individual borrowers. So now, hopefully this is a beneficial program if it does work. But I believe this is something to do with capping the amount of, stress testing the mortgages or the bank's book of mortgages. So they have to have so much within a range of loan to value and the rest of that, as opposed to hitting individual consumers. So you won't have to go 2 percentage points higher on your stress test. It'll be the bank and their book of business, which will be stress tested, meaning you have to have this make up 25%, no more than this, and whatever else. And so they've already started testing the waters on this. But I don't know if this is just going to allow individual buyers to borrow more. They're saying it's going to restrict banks, but we'll see. I haven't really looked at the numbers yet. Now, we've talked about this one on this channel before. I've put a couple posts out in the last couple of years, but from Ron Butler there, he shared this post. Canadians believe real estate is a fantastic investment in 2021. Over 50% of all Ontario house sales were to investors. 50% of all sales in 2021 were to investors. So that just shows you the speculation right there. I don't know where he got that number from, but I believe it. I saw the rampant speculation, and this is why house prices are so high. As a pure investment, real estate ain't so hot. Check out this study. Now, mind you, this study is as of today or as of recently, and house prices haven't even really declined that much. Yeah, they had a blow off top in 2022, but they haven't declined much. So, this is as of now before a crash. Leverage. The 80% mortgage makes it interesting. But now that cuts both ways. So yeah, you can leverage. Leverage is great on the way up, but on the way down, it really sucks because you're going to get your margin call. And that's what's going to happen with when you can't pay your mortgage and the tenants. You can't find tenants to cover the mortgage. So yeah, it does work both ways. And that's very true. And this is from WOA, I believe it was. And they have the percentages broke down there over the last 5, 10, 20 years. But he kind of summarizes it nice here. Asset price or asset inflation compared is greater than CPI inflation, of course. $1,000 in 2005 would be worth in 2025. Gold, $71.50. So gold's obviously the clear winner there. TSX, $49.50 with reinvested dividends. And real estate, $31.50. And then the CPI, just cash, not even cash, sorry. You'd lose actually. But the CPI adjusted for those dollars. I don't know how you do that. I guess whatever. Maybe put it in GIC or something. But $15.30. So yeah, so you can see like real estate is not all it's cracked up to be. And we've gone over this. Is no secret to anyone that watches this kind of stuff, and especially the amount of money it costs to hold real estate in the downtimes too. So gold, of course, is the winner. I have one of my followers. He loves it. I'm going to give him a little shout out here. I'm not promoting. I'm not sponsored by these people, but he loves Snowline gold. He's always talking about it, sending me stuff. It's a junior miner, I believe, in Canada. But yeah, he loves gold. I love gold too. I don't have any of that stock, but I do have other things in gold. So I'm a gold guy as opposed to a crypto guy for safe haven assets. And from Market Mania, more fires here. I don't know where this was. Was it in Toronto? Yeah, Yorkville. It's in Toronto. So yeah, there's a bunch of new homes. Another new construction fire. Innocent lives at risk because reckless investors couldn't complete their purchase. Let's be real, many are committing fraud anyway. The market isn't just broken, it's burning. So yeah, I used to track the fires, and it just they went away for a bit. Actually, I think it must have been the springtime or something. Prices were going back up. The hope came back to these investors or whoever it was. But of course, many people realize that these aren't just random fires and kids setting fires like we used to when we were kids. Never anything serious though. But this is, looks like it's investors, and we've seen people like videos with gas cans and grown men running into homes, setting them on fire and leaving. Like, why would you be doing that? Because you don't want it to close, most likely. That makes the best case scenario for that. But and this one was in a populated area, so there is people living in other homes close by. So that's what he's talking about, the innocent lives there. Interesting little post here from Shaknoza. I don't know if I said your name right. Sorry if I didn't. One of the lenders, Rocket Mortgage, is discontinuing their services and no longer accepting any new submissions effective immediately. So that's probably a smaller, it could be mid to small private or B lender, I believe it is. And yeah, they're closing up shop there, and they were probably taking a lot of risky loans, I'm guessing, if they're not a big bank or Class A or A lender or whatever. But yeah, closing up shop, sign of the times. Now, I didn't know this next one, but it doesn't surprise me. I didn't really look into it much. Did you know that lumber from Nova Scotia or New Brunswick cannot be purchased to build homes in Ontario because of the building code, on the Ontario building code? Interesting how this also helps keep building costs high, which is stupidity. It's like Canadian trees. Like, why? What's the difference with the lumber? I'd like to know. I'd like to know why it's so unsafe or why it cannot be used in Ontario. Again, it's bureaucracy. We hear a lot about this now with all these trade wars and tariffs, that we have our own tariffs and trade restrictions in Canada between provinces, which is just ridiculous. From Cam Cassidy, he's a realtor. I forget where he's a realtor, but I know he's a realtor there. He's follows me on here. I think I follow him. I got one of my listings sold last night. Boy, was that a challenge. Multiple strategies executed, multiple negotiations died, multiple appraisals coming in lower than purchase price. Happy to get my sellers out of a tough spot. So yeah, this is what happens. This is like normal. This is more normal than the opposite of just anything appraises and, it's sold right away. Or this is like kind of normal times where I've seen them, obviously not in the last, 5 to 8 years. But this is what it should take, right? Hard work, and it's getting tough out there to sell places. I know too, like my listings, like anybody, it's not just my listings, but 26%, I think, in Niagara of the sales to new listings ratio. So it's a buyer's market. It's hard to move listings. You got to price them right. You got to work at them. People come in, they offer, you counter, and they just walk away. So it's a chore to sell a listing right now. Now, this is what I've been waiting for. This is what we knew, right? So it's just a matter of time before it hits Calgary here. This is from Beth O'Donoghue. I don't know if she's in Calgary or whatever. Rush of buyers from Toronto trying to assign their units in Calgary. FOMO buying has paved the way for panic analysis and fear. Many are afraid of tariff implications and are thinking they've hit a peak. I had a friend ask me to help them out, so I told them I'd look into it. Calgary's making an all-time high. Calgary's not going to get affected. Well, it is going to get affected because they speculated too, and their rental inventory is increased through the roof at the same time. Yeah, this one's crazy too. So this is out of Portugal. The first ever AI real estate agent just closed $100 million in sales in Portugal. It works 24/7, handles leads, answers inquiries instantly, runs virtual tours, and processes thousands of listings in seconds. AI is changing the game. Are you ready? And this guy talks about the AI here. He's got some music in the background, so I'm just going to play the first few seconds so you can hear what this guy has to say.
The first ever AI real estate agent generated 100 million sales in Portugal by handling leads in customer.
Yeah, so that's crazy. $100 million in AI sales. Now, of course, there's humans involved with that. It's not just running by itself like some Cyberdyne systems or something. And lastly, before we move on to the most recent stats from February, a message from our finance minister.
Vashi, I'm not a psychiatrist. I wasn't very good in math and sciences. I went to law school. I'm not a doctor. I don't pretend to imagine what motivates people. My job as the finance minister is to do what I can to defend Canada.
So our finance minister clearly states that he's not very good in math and science, but math. Don't you think that Canada's finance minister should be good in math? I would think it's a prerequisite to the job. But anyway, this is the world we live in, and this is our finance minister. Now, moving on to some stats from across the country, we're also going to talk about this here. And there hasn't been any changes this week, but we're getting close. But let's get right into it. So we just got an update from the mortgage arrears from the Central Bankers Association. This tracks the big 10 banks, not all the other ones. So I'm guessing mortgage arrears are like record highs right now when you're talking about private lenders and B lenders and all the rest of those kind of things and mortgage investment corporations. But this is just the big 10 banks in Canada. And you can see this is the number of mortgage arrears. So the total numbers is like 10,900 and something. So we're just under that 11,000. And if you look at in the center of the screen there, and I mentioned this before, it seems like when we hit 11,000, they really skyrocket. And you look back there at the beginning right above my head, same thing, just over 11,000, they really took off. And even at the pandemic there at 2020, again, it was like just over 11,000, and then they shot back up until the stimulus came, and then they came right back down. But if you look at the most recent data here, this is from December 2024, of course, 60 days behind right now, the data. And look at the increase. Look how much it just shot up there. It went up, say, 500 or so, which is not a lot of mortgage arrears by any account for the whole country. But it just look at the trajectory of that. It shoots right up, and it's going to continue on. So I'd like to know where we're at right now. Of course, we don't have that data yet, but I'm guessing it's going to be a lot higher than it was in December. And here we have the percentage base. So this is based on a percentage as opposed to the actual number. We're at 0.22. So it did go up from 0.21% to 0.22. And I drew the trend line there just to show you when it hits 0.23, I believe it is, when it's going to be tied with that previous low there just before 2020. Then I'm going to add another bar to that home buying recipe on the mortgage arrears, because right now it's still at rock bottom. Well, it's got one bar because it has come from its lows. It started to increase. But once it hits our previous lows, there's another bar. So we're making progress there. We're headed in the right direction. And I'm sure there's going to be a lot of buyers out there that are waiting to hear this. But again, I've seen that pool of pent-up buyers is diminishing. So there's less and less because of the sentiment in the market with the trade war and potential unemployment. Talking about unemployment here, we did get the unemployment numbers for February. It held at 6.6, so no change to that on the home buying recipe either. But it is 6.6%, holding steady. We'll see where it goes from here. I hear about a lot of layoffs all the time, but it doesn't really seem to affect this much. I didn't look into the breakdown if it's public sector that is offsetting this right now. But it is what it is, and it's still above 6.5, so it hasn't affected the battery bars there. All right, now we're moving on to the data from across the country here, starting with the sales to new listings ratio for February, the market balance. I'll just move my head out of the way here, put it up here. So the blue is February 2025, and the gray was last year. So I just want to look at the overall trend here. So almost every area besides like Montreal and province of Quebec and a few areas in Victoria, BC actually, they were tied. But all other areas, as aside from those, are much lower, so much closer to buyer's territory or in buyer's territory compared with last year. And if you look at actually last year, you'll see the 40% there, that trend line that goes right across. Not one place in February last year on this chart. Now I don't have the East Coast, and I don't have Chilliwack and a couple of places in Ontario that I usually put, but they hadn't reported the numbers. But these are like the major places here. All the major places are in here. So last year, not one place was in buyer's territory below 40%. Look at this year. All the way, almost half of them, so just under half. All those areas, Kingston and area, Greater Vancouver, Niagara region, Waterloo region, Northumberland Hills, Barrie, York, Toronto, Fraser Valley, Halton, Peel. Like these are big populated areas, and they're all in buyer's markets. So it's just a little less than half that are reported here. And look at how close till you get to what, 43, 45%. That's close to a buyer's market. So almost all areas are in buyer's market or teetering on the edge of buyer's markets in Canada right now. Even Ottawa's at what, 46% there right now, which again, it's in balanced territory, but not far off. And this is for February. When look at last February, it was a lot higher. So that trend, it's a big change, and it just, again, you have to look at the overall market. Stop listening to the noise of March and April and the spring market, and you should have bought in the FOMO. Like, that's going to go away just like it does every year. And so don't go overpaying and pumping the market. You're not doing anyone any favors. Moving on to here, this is the percentage decline from the peak. So how much a place has gone down. I go through this every month. Not a big change here. Guelph leads the way here, 28% from the peak. Then Northumberland Hills, Durham region, Waterloo region, all above 25%. Same with Niagara region, 25%. Hamilton, 25% from the peak. Barrie, Simcoe, 24.5. Kingston and area, 23.7. And the list goes down. Lots of 20% there. York, Halton, London, Peterborough, Peel, Fraser Valley, all in the 20% plus range. Then Ottawa down 13.3%. They're doing pretty good. Again, lots of public sector buying up the houses in there. And I don't know why, because nobody's even working in there right now. But there was lots of, again, politicians and public sector employees and lots of government spending to support those house prices in Ottawa. Keep going down here, 10%. Toronto, only 10% from the peak, 11%, but they had a big jump month over month. We'll see in just a couple slides from now. Victoria, only 10% down from the peak. Greater Vancouver down 9%. So you call this a real estate crash? This is not a real estate crash. It hasn't happened yet, and I've said this a few times now. 2.1% Montreal, Calgary down 1.6%. Then we have new highs. Province of Quebec, new high, 0.4% higher than the previous high. Edmonton made a new high, 2% increase over their previous high. And look at Saskatchewan, a 4.2% increase over their previous high. Let's look at the numbers here now, the dollar figures here. I used my other computer, so the numbers are kind of small here. But Halton down 336,000. Durham region down 327, Guelph down 318, York down 302, Peel down almost 300,000, Fraser Valley 286. These are big numbers. Look at those, 266 Waterloo region, 257 Hamilton. Anyway, you keep going down. There's tons of them over $200,000 there. Keep going down all the way, but then you have the big areas here. Toronto, look at Toronto, 135 from their peak, which is nothing in Toronto. And then 10%, right? Greater Vancouver, 122,000 from their peak. Again, that's nothing considering their prices. Victoria down 113,000. Ottawa down 105,000. Montreal only down 13,000 from their peak. Calgary down only 10,000. I'm guessing they're going to hit their new peak again this year. I don't know by how much, but it looks like they will. Province of Quebec, new high, we just mentioned it, $2,000 above their previous high. Edmonton, over $9,000 above their previous high, which is, significant enough, 2% there. And Saskatchewan, $14,000 above their previous high. And again, I've talked about just on that FOMO ad, so Toronto and Saskatchewan, places like that. Yeah, you probably should worry about the spring market if you're worried about FOMO and stuff like that, but it's the springtime, it happens every year, and the summer we'll see prices decline. Plus this year, it's just economy's getting worse and worse. So I would be very careful out there if you're buying, even in Saskatchewan at 300,000 or wherever the prices are. Now moving on to the month over month price changes here. So Barrie's the biggest loser up there, down 7.1%. Then Guelph, 6.7%. Sorry, I forgot to put my lines on this page here to separate so we can see. Kingston down 4.6 or 4.8. Fraser Valley down 3.9. Windsor Essex down 2.5. London area 2.5. Montreal, very little change there, 0.2%. And then you got Durham region. And then we're going to go right down to the bottom there. Look at Peterborough, 12.9% increase. Toronto, that's a big increase for Toronto. And I heard a lot of stuff coming out of Toronto, and not in Toronto, the market's doing well. And of course that's true in February. We'll see how it lasts in March. They probably looks like they had their big boom. I don't think March will be as good, but I could be wrong. Saskatchewan, 10.1% month over month. That's 10% jump for Saskatchewan. That's crazy. Again, you probably have a lot of people moving from these bigger areas to Saskatchewan looking for a deal. Northumberland Hills. Anyway, you see the list there. York region. So we have these. Again, most of these aren't big month-over-month increases for February now, but except for the ones at the bottom. But so all in there. They're all like 1-2% most places, which again isn't that significant for February. All right, lastly, we have the year-over-year price change. This is something I added, I think, last month. I didn't usually or previously do this. So York region. So now look, let's look at all of them. Half the places on this chart are down year over year. So now that shows you a good representation of the market also here. So yeah, York, Halton, Kingston, Northumberland Hills, all seeing like significant year-over-year price declines for February. Greater Vancouver, even it's down. Like they did have a big month-over-month increase, but the year-over-year is down 3.8%. Windsor, Essex, Guelph, Durham region down. Hamilton down, Barrie and Simcoe down, Fraser Valley down, Waterloo down, and then on the upside we have Peel, not by much, less than 1%. Same with Ottawa, Toronto up 2.2%. Victoria up 2.8%. Then you have Niagara region 4.1% year over year, 4.9% in London, Calgary 5.1%, Montreal 6.7%, and then in the 7% Peterborough, province of Quebec 7.7%, both. Edmonton up 10.6%, and Saskatchewan up 13.1% year over year. So that's it for this week. Let me know in the comments how your local market's doing, and until next week, I'll see you then.